What's up, gang? It's Zilux, and I'm back with another video. And I'm gonna have to ask you guys to ignore my chopped hair. This is what happens when you shampoo your hair for the first time in like 5 days. So definitely don't recommend. But yeah, let's hop straight into the video. So today I'm gonna be going over, my specific journaling strategy and why I think it's so beneficial for anyone that wants to become a successful day trader to journal every single trade they take, no matter if it's a live account, paper trade, back testing, journal everything. And I'm going to explain to you why I think that's so important. So let's dive right into that. So, one thing that I think is really cool with journaling your trades is kind of seeing how far you've came from being a beginner to a little more experienced. So right here is my very first, trades that I ever took and journaled, which I did learn to journal pretty early into my journey. You can see my first one was around February 24th. And if you've watched my other videos, you might know that I started midway through February. So within a week or so, I learned that you should start journaling your trades. So you can see here, this was my very first one. And a little bit of context, you might notice I was trading Forex here. And that was, what I thought was good because a lot of people, especially in the past, would trade Forex. But now that I know a little more, I specifically only trade NQ or ES sometimes. But you can see here, I was trading Forex and I was doing this strategy called CRT, which is the candle range theory. And essentially, I would look for a tap into a 4-hour fair value gap, like an unfilled one. And once that happens, I would go on the 15-minute chart and I would look for a signature in price. And I'll put a kind of picture on the screen right now of kind of what I looked for. Essentially, it's a candle that taps into the fair value gap, and then the next one puts a wick above the previous candle's wick or below the previous candle's wick, but doesn't close over it. And that signature is what I would look for. And when I saw that, I would go on to the 1 minute and look for an entry, which would be a change in state of delivery, and then the inversion of a fair value gap. And I didn't always stick to my plan. And the way it worked is I would never target past the candle. I would just close it once it hit the bottom or the top of the candle that I was aiming for. And you can see my risk rewards were never good with it, which is something I didn't really understand. But yeah, so this is my very first trade where I made 162 paper dollars. All of this is paper trading, just FYI. So I understood from the start not to risk any real money because I knew I was very new. So this is paper trading, and you can see this is the very first trade I took and journaled. We had the change in state here, and price went straight to, the range that I wanted it to hit. So pretty cool. I didn't really leave any good notes for myself besides the fact that I took the trade in class. So good job, me. And I do want to go over my worst loss that I took and journaled, which was only 3 days after that. You can see I took a lot of trades, which is something I definitely don't do anymore. But yeah, so February 27th, I lost 1.6K in paper money. And I didn't really understand risk management at this point, but I saw this setup and I thought it was the best thing ever. We had the change in state, we had the inversion, and it just immediately dumped. And I must have entered super big because I thought it was going to be a banger trade, and it went immediately to my stop loss, basically. And I lost that much money. And you can see I kind of took a bit of a break after that, February 27th to March 2nd, which is about 3 days. So I went from trading a lot every single day where I took a little break. So I think I was kind of bummed out about this, even though it's literally paper money. Like, what's the reason to get mad over that? And in the moment, I was kind of sad, like, wow, that's a lot of money, even though it's fake. But I let my emotions kind of affect me, and that's something I've learned to control now. And I definitely learned a lot from this trade. Definitely how important risk management is, and not getting emotional and thinking every trade is going to work and never fail. So yeah, that's a big tip I learned. To go past the very first trades I took into my real paper trading journal, which is something that I started once I kind of got more of a feel for the charts and everything. So you can still see I'm trading CRT here, but eventually I switched to ICT concepts more, and then the inverse fair value gap model, and I still wasn't great at managing my risk. You can see like almost $1,000 loss here. I did have a really banger trade right here, so let's go over that. So I made $663 on April 22nd, so not that long ago, literally a month ago from the day I'm recording this. So I learned how to write real notes. So my bias was bullish. There was a 30-second fair value gap, and we finally inverted it, and we swept two sell side liquidities, so two lows when forming it. So I felt confident that we'd go back bullish. And this is my post notes. So I sold two after we hit the previous high, which would have been, let's see, I entered here. So I sold two right here. Okay. Interesting. So yeah, I sold two at this high, and then two more after we hit London highs right here. And I kept a one contract runner going above this, I guess. Oh, here are all my executions. So you can see entered off here, and I think I accidentally bought it and then sold it immediately. So this is why there's two. So I bought 5 back, then I sold 2 here, and then sold 2 at this price here, which we can see it goes higher, but that's besides the case. I made my money. And that trade, I remember I was super happy about, because that was, the only big trade I've really hit. Everything has been more kind of like break even or like scalp trades. I remember this one was literally a paper trade that I was watching the chart on, but I was like not sure if I should enter. But I journaled it anyways because I wanted to enter it, but I just didn't. And I was felt so proud, even though it wasn't a trade I actually entered. Definitely don't recommend doing that. Because who are you trying to impress? Yourself? No one else is looking at your journal, so why does it really matter? But going off that point, I do like to journal trades that I considered taking but didn't in the moment. So I think on my Apex funded journal, I did that a couple times. So if we look at the list, some of these 0 ones like this, you can see it wasn't a win or a loss. But if I look at the notes, I didn't want to take this trade because I wanted to look for a retrace, and looking back at it, looking for a retrace here doesn't really make sense because the RR was already good. And this is a super good trade. We had a good V shape, had a good inversion of this. We're pretty far in discount. The RR is good. The beat, we closed above this fair value gap super low. The next internal highs way above that, literally 1R. There's 0 point to look for a retrace, and for some reason I did. I could have argued to enter off this here, but I mean, entering off this gap that we tap back into. But it's good, I'd say, to enter trades that you considered taking but didn't, and explaining why, and learning from that mistake. So that is one thing that I definitely recommend. To close off this video on my lessons learned, this is a trade I took 2 days ago, and you might notice that I lost $1,900, and you might be like, I thought you were a little better at this. Why are you taking trades where you're losing $1,900? And to that, I will say that I made a very big mistake. This was on my actual evaluation for my Apex account, which I'm trying to take, like a live account, to eventually pass it and carry those habits into a funded account and get payouts that way. And yeah, I completely blew the account. I think it's something that's inevitable for every trader. And the way it happened is, I wrote the notes here, but what I do is I'll chart on NQ, and then I'll enter on MNQ. So I'll try to, do the drawings on both, so I know where to exit and where to enter and everything. And I thought I entered on the micro, and it turns out I entered on the mini, which I say here that I was pretty sure it said MNQ at the top, but I probably just clicked the wrong button and entered on NQ. And it didn't even hit my stop loss. I entered and price immediately went down. And once it hit my drawdown limit, it just took me out of the trade and didn't let me place any more trades. And yeah, that was my first time blowing a funded account. Even though it was an eval stage, it was a little sad, but I had been in this account for almost 30 days. You can see April 25th and May 20th. So my next month's subscription wasn't until May 22nd. So I only paid for the first month, which I bought using the 90% off code for Apex. And I never paid the second months because I didn't reach that time. So I really lost, I didn't really lose much money because I never hit that second month. So I gained a lot of experience of trading semi-live funds. There's a little bit of risk tied to it because if you blow your eval, you have to pay for another one. So it adds a little bit to my psychology and emotions when I enter a trade, and it was definitely worth, the $16 I paid for it. And yeah, I definitely recommend that once you guys get sort of a better understanding and you're doing well on paper trading. If you have the funds, wait for like an Apex 80% off or 90% off discount and buy, one funded and try to pass the eval trading like you would normally, and not over risking, not over leveraging, trading like it's a normal account and building good habits, until you pass it, and then you can look for a payout. So yeah, that's going to be all for this video. One last tip I want to leave you guys as I close out this video is to, embrace the losses. Losses are inevitable for everyone. The best traders, some of them don't even have over a 50% win rate, and they lose all the time. But what matters is they manage their risk properly, and that lets them win more than they lose. And even if their win rate's lower than 50%, if they're winning more money than the amount they're losing on every trade, they'll be profitable in the long run. So just understand that. And even if you are, losing on paper, you're at least gaining experience every single time you lose, and especially journaling it to look back on and understand, okay, what went wrong? Was there anything I did right? How can I not do this again, So embrace the losses and you'll find success. So I hope you guys enjoyed this video. Make sure you subscribe and follow along with my journey to becoming a profitable trader. I'll see you guys in the next one.